Alright guys, welcome to this episode on big mistakes that new traders can make starting out as traders. One of them starting out would be is those indicators. A lot of times they throw indicators up, they look cool, they're always looking for that new technical trade, that looks really cool. But the problem is it takes time to really get to know the indicator. So you try this out, you look at it, you're like, this looks cool, put it up there, you start trading and it doesn't work, you start losing money. So they're like, okay, well, this didn't work out for me. So then you turn around and you'll be like, yeah, this is just not working. And you go and you're like, all right, let me try this one right here. Yeah, this will be the one that will work for me. So then you start doing it, you start working with it, and it's just, no, that's not working either. I'm losing money. All right, well, you know what, then just throw these out. These don't work for me. They turn around, they try something new. So then they try this type of setup right here. Yeah, that's it. This will be the winning trade because other people are making money on it. And I heard some cool things about ADX and CCI, so I'm gonna go in there and try it out. And no, still losing money. Man, there's gotta be something wrong. So then let's try something different because if that didn't work out, we need to find something cool or something better. So then we'll jump over to this one. Like, yeah, okay, this should work for me. And for some reason, it's not the indicator's fault. Is that hopping from one thing to another without knowing how the indicator works is what causes the problem. When you have an indicator, it becomes part of you. You start understanding when the indicator is working properly with that particular stock and when it's not because that stock is not working on that time frame. You have to really get to know one particular indicator and make it your own. So that way you know when the market is doing something. So, but no, that can't be right. No, it got to be something different. So then they load something like this. That will work. Now I got everything on my charts. This will work for me. I can definitely see everything that's coming my direction. Problem is, I can't see anything. Man, one indicator is saying it's going up, another indicator is saying it's going down. Everything's so squished together. I gotta squint my eyes just to be able to see what's going on in there. The biggest mistake is overloading with too many indicators. You gotta keep it simple. You gotta keep it clean. Get to know a few indicators. Make sure that you understand what it is that you're doing that you're working with. The simpler, the better. The cleaner, the better. The more you can see, the better. You don't need a lot to know what the market is doing if you get really good at a few things. Make sense? So keeping it clean will help your eyes, and then you'll be able to see how the market is moving. All right, we're going to clean this up again. If you get into a trade, and let's say you purchased right here. Oh, yeah, I got the right one. You bought stock right there, and for some reason it fell. Buying again on a drop, it's not good. It's like people try to add to it, thinking, okay, well, if I add to it now, then when it bounces up, it's going to go up, and then it falls again. And then you're like, oh man, I need to put more money into this because I'll catch the bounce eventually. Then you buy again right here, and it falls again, and it falls again. So mistake is always chasing the market and trying to buy it when it's lower to make up for your original loss. That is a mistake that will cost you a lot. That's definitely not a good way to do this. Never trade without a stop loss. So for example, if you purchased here and the market went against you, you got to get out. It's like if it's just one of those things where it did not work in your favor, let's say you say, okay, well, if it goes down below this line, I got to go. It didn't work in my favor. You wanted it to go long, and it broke down. You got to get out. Not having a stop loss, saying, well, I'm hoping this thing will turn around, and somewhere around here will bounce back, and that didn't happen. And then you're like, oh, okay, well, I'll give it a little bit more time. It'll bounce, and then it goes all the way down here. And like, yeah, I'll just wait for the bounce down here. It's, again, you cannot wait for it. Once it gets below that line, you got to keep those stop losses, not too tight, but not too loose either. If it goes against you, get out and then get in for it later. Okay? Never add to that losing trade that we were talking about earlier. Don't risk more than you can afford. So if it's, if you're putting all your money into it and then that one shot right here just stole $300 from you and it's not something that you were able to afford, don't go in that deep. Put a little bit less in there. That way you don't take such a big hit. Okay, especially when you have a small, bank account when you're starting out. So going all in is definitely not the good way of doing this. Don't anticipate the news. Like if you sit there and be like, yeah, if the news comes out, there's some good news coming out, because not all good news affects the market. You can have good news and the market still goes down, because the market is designed to take your money. They're there to steal it. Just really what it is. The market will steal your money. Good news, bad news, you cannot predict what the market's going to do. It's going to try to go the opposite direction of where the majority of the people are going, so that way it makes the money, not you. Okay, so anticipating the news, it doesn't help. Don't take multiple trades and that you can't keep an eye on. For example, if you're day trading and you get into this trade and then you get into another trade and you have a third trade, it's hard to you to really sit there and actually figure out where the market is going if you're jumping from stock to stock. It's going to end up distracting you, and you're not going to be able to focus on what it is that you're getting into. So what should you be doing? Well, have a plan. Like for example, if you turn around and you say that you want to get into this trade right here, know where your stop loss is. If let's say you say, okay, I want to get out if it breaks below that, and once it reaches this high, I'm out. So I'm in here, I'm out here. You got to have a plan. You can't go in not knowing where your next exit is, or if it goes against you, when to get out. You got to have that before you put your money into it. Zoom out. See the bigger picture. Let's say you're down into this one's on a 1 hour, but let's say you're down trading the 1 minute and you want to get into this trade. You can't see the bigger picture. You got to zoom out and see what is the market doing. As of right now, this stock is falling. So if you're thinking that this is going to go long on a market that's falling, it might not go in your favor. Or if it does, it's going to be very, very short-lived. So you got to take those little runs quicker, because this is still right here. It's going to hit something and it's going to bounce down. So if you're thinking it's going to reach up here when it's already hitting the resistance, it might not be in your favor. You got to zoom out and look at the bigger picture. Also, remember your fees. Every time you buy and you sell and you break even, or if you lose money, you're still paying $7, whatever it is that you're paying to buy in, and it's $7 to buy out. Okay, so it's costing you money also at the same time. So keep an eye on that as well. Don't fall in love with a stock. If you're a day trader, unless you're buying a stock because you love the company and you're going to leave your money in there no matter what happens for a year or two, that's a different kind of trading. If you're a day trader, you cannot fall in love with the stock. To you is just something that is here today, and if the company's gone tomorrow, oh well, time to move on to something else. Only trade your strategy. If you have an ABC strategy and the stock is not doing your ABC patterns, don't touch it. Because if it's something that's outside of your strategy, the chances of you being successful might not be in your favor. Stick to your strategy, stick to your plan, let the market come to you, and if you don't trade today, there's always tomorrow. It's when you get that itchy finger that you need to get into a trade today that you're just not letting the market come to you. Because if it doesn't happen in the morning, it might happen in the afternoon. If there's nothing happening in the afternoon, it might be at the closing. The power hour, they call it, at the end of the day. Somewhere along the day, it's going to give you that ABC pattern that you love, that you know that you can make your money with. So stick with that. Don't keep changing your plans, and you'll start seeing some profits. All right, guys. So hopefully this will help you with your trading. I'll see you guys in the trading room.